Hi, Jonathan York, my financial partners, looking at the investment markets. Certainly a pretty reasonable sort of earnings season from the US. Around sort of 70% of companies sort of beat estimates, but obviously some of those estimates have been hammered down pretty hard after the second quarter. But it still looks like the US consumer is still in pretty good shape. We're seeing Thanksgiving, Black Friday, and Cyber Monday sales. Black Friday sales were up just over $9 billion. That's about a 2% increase on the previous year, and really shows that the US consumer is certainly pretty robust and still has plenty of money to spend, despite the rising interest rates and obviously the inflationary pressures in the US. But just on those inflationary pressures, I mean, certainly in the US, it does appear that, from the data coming through, inflationary pressures do appear to be sort of waning now. We appear to have seen peak inflation, and it's now just a question of how quickly it will come down. Because there is some hope now that potentially the Fed will look at a 50 basis point hike rather than a 75 basis point hike in December. Obviously, the next big test for the market will be the unemployment data. And again, that's sort of still a pretty robust economy out there, still finding around sort of 200,000 jobs on average over the course of the year. And again, pretty interesting that the 10-year rate, the key sort of interest rate in the US, that's way back below 4% now, currently trading around sort of 375 and change. Now, obviously, still plenty of other issues to sort of consider out there. Most notably is this sort of civil unrest in China on the back of the sort of zero COVID policy that's being pursued there. Because certainly many cities, sort of in lockdown, and people are, sort of concerned that they're losing sort of their civil rights, their human rights, and now really starting to protest. And for the first time as well, you're starting to see protests where they were calling for Xi Jinping to stand down and to be removed from office. Now, although that was only a small minority, that's really a pretty major step for sort of China, who's not really used to seeing this sort of level of public dissent. And obviously the implications for the supply chains, could be pretty damaging if China continues to see sort of rising COVID cases and sort of further lockdowns. And obviously as well, the other case is obviously the Ukraine-Russian war. That's sort of dragging on, and it's really hard to see how Putin comes out of that with any sort of credibility. It's also tough to see a president as well, how he's going to come out of it with any sort of victory as well. So oil is back well below 80 bucks now. It's currently trading around $78 on WTI. It's just going to be interesting now to see how that sort of trades through on the northern sort of hemisphere winter. Because maybe not such an issue for oil, but certainly for gas, it's really a pretty major concern. Obviously, those European countries that are pretty reliant on gas for their sort of winter heating. Now, in the UK as well, starting to see a little bit of a pickup in sort of industrial disputes and sort of unrest, sort of strikes, etc. As people are really grappling with the inflationary pressures out there in the UK economy. And especially coming into Christmas time as well, it's never a sort of easy time out there. And with the inflationary pressures out there, it looks like it's going to be a pretty tough Christmas for the UK public. And the big news out of Europe is that Germany has signed a gas deal with Qatar, where Qatar will supply gas to Germany for the next sort of 15 years. So that does put a little bit of certainty in place. The issue is that the deal doesn't come into operation, and the earliest they can get it running is 2026. So at present, obviously, some short-term sort of supply issues for Germany and their gas supplies, but longer term, they seem to have locked in this deal, which should bring a little bit of certainty to the German economy. Also, as well, a little bit of talk about changing some of the immigration rules in Germany because, again, they've still got a mass labour shortage there. Currently got about 800,000 job vacancies. A little bit closer to home in Australia, it's still sort of trading, at a reasonable sort of level. ASX sitting some pretty decent highs, getting back to levels last seen in May of this year. And for now as well, the weather appears to have sort of relented. So sort of parts of New South Wales and Victoria can now again begin the clean-up after the latest sort of flooding activity there. And now obviously what Australia will be hoping for is a pretty decent summer season, plenty of visitors out there, tourists spending money, and that should really give the economy a little bit of a sort of a boost. Because certainly the Australian government has really been pretty proactive on getting those visas sorted out as well for sort of holiday workers coming through, which will help alleviate some of the labour pressures. Now here in New Zealand, despite what the government is sort of saying, that doesn't appear to be the case. When you actually talk to employers out there, still finding it very hard to find workers, and most sort of industries have vacancies out there. And that's just adding further pressure to the government because, potentially as well, you've got that fuel tax relief coming off in January, which potentially could put another 25 cents on a litre of fuel. And by then as well, 2023 will then be in the election year. And like I say, it's just going to be very difficult for the government at present to see how they can sort of put that tax back on. And that comes on the back as well as rising COVID cases as well, which appear to be sort of sliding under the radar. Really, not much has been spoken about it. Certainly, there's not a lot of reporting of figures. But certainly COVID cases are on the rise in New Zealand, and potentially we could see another COVID wave coming through just in time for Christmas, which will obviously not be good news. On a more positive side, we are starting to see the cruise ships come in now. That's obviously giving a bit of a boost to the domestic economy. A little bit of talk about super as well, and potentially, raising the age of entitlement there from 65 to 67. Currently we have about 4 workers supplying funding for every one retiree. But by 2050, that figure will have fallen down to around 2.5. Which obviously has some pretty major implications going forward. So obviously with the superannuation debate, it's pretty important on those KiwiSaver balances to keep those numbers sort of ticking over and keep those contributions going forward. But obviously the good news is that the Reserve Bank doesn't meet again until February, which, after the recent hike of 75 basis points, taking the OCR up to 4.25, there's now a little bit of breathing space until February at least. But also as well, that would give time for some of these hikes to actually sort of filter through and have an impact on the economy. And it'd just be very interesting to see when the Reserve Bank does meet again in February to see what their sort of stance is and what they're sort of looking at doing. Because especially if you look at other countries, say inflation, certainly in the US, is starting to wane now, starting to fall. Here in New Zealand, that doesn't appear to be the case. And you can't keep blaming COVID for the inflationary pressures. Now, obviously, on the back of the recent rate hikes, house prices continue to fall, and it's just going to be interesting to see where they do sort of plateau, especially coming into sort of summer period where historically, that's a pretty reasonable time for sort of selling houses. So it'll be interesting to see, one, the activity taking place, but also as well, obviously, the length of time it takes to sell a house, and then the prices that are being reached. Now, if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.